you predict sizable inflation coming, perhaps only
Right.
months away. What is different now than a decade ago when Bernanke did it? I've been wanting to have Rob Wenzel on this program for a long, long time. If you don't read the Economic Policy Journal, a free publication online, and you're an econ junkie like I am, you're missing something big. Robert also runs the Daily Alert from the Economic Policy Journal, something I read every day. Rob, thanks for being here with us.
My pleasure. Happy to be with you, John.
I appreciate so much from you and what I've learned over the several years. And again, if people don't get to the economicpolicyjournal.com, they're really missing a lot of just terrific information, and it's just very worthwhile. Your criticism of the Federal Reserve is sharp and blunted. The idea of the Federal Reserve, I thought, was to make sure that we had a solid, consistent dollar. The Fed was created, what, in the 20s? I'm trying to remember. They've been around for 100 years.
Before that, 1914.
1914.
Woodrow Wilson.
I mean, before that, weren't there problems with how we created money? I mean, the government could coin money, but we really didn't have something as stable as the English pound. What was the charge for the Federal Reserve? Their job was to do what?
Well, the original charge for the Federal Reserve was to be the lender of last resort when a crisis hit. And since then, it's been expanded to fight there's sort of a dual mandate now of keeping unemployment low and keeping price inflation low. But they've basically failed at both, and it's unclear the policies they institute are really helping unemployment. I think they create the boom bust cycle, and from time to time, price inflation will get out of hand when they're running their programs. Right now is a situation where I think we could be very close to an acceleration.
I tend to agree on that. I've always thought that the Federal Reserve, if their job was to fight inflation, which I thought was their job, at least in most of my lifetime, what I really heard was we need a consistent dollar. And it used to be that the dollar was backed by a commodity, gold, silver, and therefore when somebody held up a dollar bill around the globe, it was worth something. That has morphed over the decades, the last straw being in the 70s with Nixon taking us off the gold standard altogether.
Right.
That the dollar now has become what we call a fiat currency. That it is, right, I'll use my term, a faith-based currency. That as long as everyone has a collective faith in this piece of paper, that it's solid, and tomorrow and the next day and the next day it'll still be worth something, well, then we're happy to trade it. That works if you keep the number of dollar bills out there pretty consistent so that they're not created and go crazy. But that's exactly what happened. Tell me, the money supply is, for those who don't know, the amount of those dollar bills in the world. And it can be electronic, it can be in paper, but the amount of money that the Federal Reserve has issued. From when it started over 100 years ago to now, how much has the money supply increased compared to, let's say, population growth or any other good measurement?
Yeah, it really doesn't matter how much population growth it is, because what would happen is prices would just drop if you had a situation where there was an increase in population which increased productivity. You would see declining prices all the time, and that would be just great. But what has happened is the Federal Reserve just keeps on increasing the money supply regularly, and sometimes in major bursts, and then they tighten up a little bit, which causes the crises. And it's literally trillions of dollars. But the key is, and when you bring this up, the dollar was once linked to gold. Gold was once the currency, the medium of exchange. And the government sort of gets in, makes the dollar, in the case of the United States, the pound in England, a receipt for that. And then over time, they sort of cut the ability to convert the paper to the gold because they're printing much more paper than there is gold. If we were back at a gold standard, you would have extremely limited increases in the money supply because you got to dig the gold out of the earth to increase the money supply.
So in a real simple terms, back when gold was the medium and dollar bills represented a fixed amount of money or fixed amount of gold, you wanted to increase the number of dollar bills, you had to go dig a bunch of holes, find more gold so that you could have more dollar bills. Now that the dollar bill is just put on a photocopy machine, you can create that as much as you like, and we trust these guys, the Federal Reserve, to make this decision, which means it moves from a world of limited, here's how many dollars you can have, growing pretty consistently and slowly, into a very political system. And there's always a push for more dollars. Every political regime wants more currency so they can buy more things. Am I wrong on that? There's always a push to get more dollars.
No, absolutely. The government is always looking to try and gain more buying power versus the citizens. And the way they do that through a number of different mechanisms, but basically it comes down in most cases to printing money, whether it be digital or whatever the case might be. And now, as a matter of fact, you have something called modern monetary theory, which is gaining traction, where people, the economists from the MMT school, argue that it doesn't really matter what the debt is because you can just print money, and they will pay lip service to the potential for price inflation, but their theories are just, let's print as much money as you want. It doesn't matter, which is, from my perspective, pretty insane.
Let's jump into inflation. And when 2008's recession hit, the Obama administration started printing a lot of money. And mind you, they print it by issuing debt, they buy bonds, they can do all sorts of things, or sell bonds. And I, like a lot of people, were waiting for the reaction to be price inflation. So the monetary situation, there was inflation in the money supply. There was, let's say, twice as many dollars in the economy after a while. So I figured, well, prices must go up by twice as well. That just made common sense. It never happened. Why didn't it happen?
Well, that's because that sort of idea is kind of the Milton Friedman idea that there's a specific correlation between how much money you put into the economy and how much prices go up. But there were a number of factors here. First, what was really going up is the monetary base, and this gets a little bit technical, but a lot of money never even entered the system. There used to be nothing in something called excess reserves, which is money banks took, invested back with the Federal Reserve, so it doesn't mean it was so it means it wasn't out in the economy. That was under 500 million. I mean, there was hardly any money in it. And basically what happened is when Bernanke pumped this money, it went up by trillions. The banks just took it here, put it there. So that wasn't out bidding the on goods and services.
Would it be a fair way to say it that Bernanke put all this money into the system, the banks, basically, for lack of a better term, banks got it, and they put it into their vaults, and it just kind of sat there, so it really didn't get used. So therefore, it didn't drive up prices.
Right. Yeah. Part of that was because when Bernanke started printing all this money, he also introduced something called IOER, which I pointed out was significant. And this was before the Fed was even designating the difference between interest on reserves and interest on excess reserves. But IOER became the terminology for interest on excess reserves, or the shortcut reference to it. And what that meant was if the banks put the money with the Fed, for capital reasons, the regulations, it was a good thing to have. The interest on the excess reserves was as guaranteed as you could get because the Fed could always print the money to pay the interest. So there was zero risk. So it was a place the banks could put money and not have to worry about many things that they normally worry about. So a lot of it went there. Now, some of the money did go into the system, but not as much as people who were looking at the monetary base thought. So that you had that. But on the other hand, you had gains in production, productivity gains. And when you have productivity gains, it means there's more supply of goods. So consequently, that tends to put downward pressure on prices.
When you say
Inflation
productivity,
went up.
when you say productivity, I'm thinking things like more robotics in manufacturing. Even the personal computing revolution gave us massive amounts of productivity, meaning you didn't need as many people to run your business because you had machines doing this. So you got more output for the same amount of money that you were spending, and therefore that countered a push for inflation.
Right.
Okay.
There was productivity really across many spectrums of the economy, but still, because Bernanke was putting out significant amount. I mean, CPI climbed roughly about 5%. And then you had the break in oil prices because shale production became significant. And the United States at one point was the largest producer of oil, more so than Saudi Arabia, because of the amount of oil they produce because of fracking and different new technologies. So you had this tremendous gain. And that was when the first oil price break occurred. So oil is something that impacts across the whole spectrum of the economy.
Well, then let's fast forward.
Downward pressure.
Let's fast forward a decade, and here we are in what makes that spending spree from the Fed look like nothing. You in your daily alert do a graph that it comes out every Friday that you put in that I find mesmerizing, where you take the last 8 years of money supply growth, and you see how it grows every year throughout the year. And then we see what's going on this year, and it looks like a rocket ship from every other year. Tell me if I've got this wrong. It seems as though the money supply grows between 6 to 10%-ish over the last 8 years. And at the last update you gave me, it showed that it was growing at a rate of perhaps 60% or something around there. We don't need to get too specific, but just obscenely out of control. Why is it different this time? You predict sizable inflation coming, perhaps only months away. What is different now than a decade ago when Bernanke did it?
Yeah. Okay. So again, with Bernanke, you had a large amount that went into excess reserves. You had money that was going into the economy, which created a little spurt up in inflation that would have price inflation that would have continued if you didn't have that really great increase in productivity out of the oil sector. This time, what you have is a situation where it's not going into excess reserves at the Federal Reserve. The government is pumping money. Everybody got a $1,200 check that earned under 90,000 or whatever it was. You got unemployed people, in addition to the state unemployment, getting $600 a week from the federal government. The federal government has no money to pay for this. It's being monetized in a complex way by the Federal Reserve. You're getting corporations bailed out. It's literally trillions of dollars going into the system.
So whereas a decade ago, it was going into banks kept it in their vaults. Basically, this time, all this made-up money is going directly to human beings when it comes to unemployment and stimulus, or it's going to companies, and companies like to spend money as well. So you believe this time it's different because this money is going to get, I'll use the term engaged. I don't know if that's the right term.
Right. Correct. I mean, it'll be a little bit complicated because one of the reasons you're seeing the indexes going down now, the price indexes, is because the things people aren't buying are going down. You're seeing discounts in the airline industry, the hotel industry, the cruise industry, because there's not as much demand. So the indexes are picking that up, and also quite a bit in parallel with so many lockdowns in the retail sector. On the other hand, where demand is strong, you're seeing prices go up, which are your basic sector where where the economy has opened up, of food or whatever, you talk to anybody that does grocery shopping, and they know prices are way up. And the government's talking, the Trump administration is talking about another stimulus round. So, whatever the prices went up last time, they're going up again. And you see it in the stock market and in gold.
Let me ask you about this. And as one of my heroes once said, predicting is very, very difficult, especially about the future. But
Right.
you seem to believe that we could be just months away from sizable price inflation. I believe you think it could hit 5%. It might even hit double digits at some point.
Right.
For people my age, in their mid-50s, we don't remember inflation. I mean, I remember it, but it was Dad's problem back when I was in high school in 1980. So we think it's gone forever. And I heard an economist on NPR, of course, telling us that inflation is, quote, dead, 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 that it could never return. How high do you think inflation will hit? When do you think it'll hit? And the reason you believe is the money supply this time that's getting engaged into the economy. Even if we continue to have all this near depression level of unemployment.
Yeah. Well, see, I think the inflation is already developing in the foodstuffs and the basic stuff we're buying. That stuff is really going up right now. The stuff that's going down is, again, stuff that people aren't buying. But at some point, those discounts, whether it's the airline, the hotel, they're going to stop. They're going to plateau. It's bottom out. So those prices can stay low. And then the only thing that is going to happen is the stuff we're really buying is going to go up because everybody's got more money to buy these things. So that's just naturally going to push things up. When you've got the reverse of the productivity gains of the the early 2000s, because when you had that Bernanke money pump and you had the productivity gains of oil and elsewhere, that sort of dampened the inflation. But this time around, what you've got is a situation where we don't know, because of the lockdowns, where there's supply shortages, where there's glitches, all that kind of stuff. So it's kind of an anti-productivity situation where there's probably lots of parts of the economy where there won't be the supply available that there was before the lockdowns. And we know a lot of marginal players will be cut out. So,
so
you've got that kind of pressure.
In order to, if you're right, and again, we'll find out, although you have been predicting price inflation now for a lot of years, it hasn't hit in the way I think you predicted. But you believe that we were going to have price inflation even without what is going on now with COVID. Because why?
Well, the money supply was just increasing, and what happened is you had that break in the oil price because of the productivity gains out of Texas and other oil states, which really ramped up production. And so then once that sort of flattens out, you could still see there was price pressure because even though a lot of it went into excess reserves, there was still a lot of money that Bernanke was printing. And then you had this lockdown, which again crashed the oil price again. But this was a different kind of crash. It was a crash that was caused because no one was buying oil because you didn't have to go to work. You weren't doing anything across large parts of the world, really.
It wasn't really part of a natural business cycle. It was a government
this
shutdown.
Is not a natural business cycle. No.
Okay.
This is different. See, in a normal business cycle, what happens is the Federal Reserve pumps money in, then for some reason, because of price inflation fears or whatever, they stop printing and it crashes the economy because the money sort of moves out of the areas where the Fed was propping it up with their printing.
Let me ask you.
This is different.
Let's go to two different areas. One, which is what individuals should do if they believe the way you believe, and to be honest, I think it's the way I believe as well, of this monetary policy bringing forward an inflationary period, what we should do about it on an individual level. And then I want to play it out and ask what you think the Fed needs to do or what they will be forced to do. So first things first, if you're at home and you've got a pile of cash because you've been on unemployment or you've saved it. Is keeping it where it is wise? What should one do with that? You put out your own recommendations in your economic policy journal daily alert people can subscribe to. But in general, what do you think people should do to protect themselves?
Well, the first thing, I mean, the EPJ Daily Alert goes into a discussion of how people should invest with their entire portfolio. But the immediate advice I would give to everybody is to buy gold and silver, and you do it with about 10% of your portfolio, your net worth, whatever it has. I mean, if you got $10,000, you buy $1,000, or if you got 10, maybe $2,000 worth of gold and silver, split it up between gold and silver, because that is going to go up in price significantly if there's a price inflation, and it will protect you against the inflation. Because what's going to happen is as people realize that there's an inflation, they're going to rush into gold and silver. So the price of gold and silver is going to go up much more rapidly than prices themselves, the overall prices.
Have you always been have you always been a gold and silver guy? I mean, for the last 15 years, ever since the day Obama was elected, people have been becoming gold bugs, and you can't turn on Fox News without hearing ads for gold. You haven't been someone who has been gold crazy for this whole time, have you?
No. As a matter of fact, going back to the middle 1980s, I got thrown out of a gold mining conference because I said gold was going to go down for a long, long period of time, and it wasn't the best time to invest in gold. So I look at the situation with regard to the economy and what is going on.
How high do you think gold is going to get, and when-ish do you think it's going to happen?
Okay, so roughly we're just over $1,800 an ounce right now. So $2,000 is easy. I would say $3,000 is easy. $5,000 is probably very doable, and then it really depends upon what the Fed does from there.
Really, $5,000?
$3,000. I want to say $3,000 for sure, but $5,000 would not surprise me.
That's insane. How soon? Yeah. How do you? The question in investing is always when, and so when do you see this?
Well, it's always tough to make exact predictions with regard to this stuff, okay? But as I've been writing in the alert, I mean, we're really bumping up against the old record highs in gold. So once it breaks through that between 1,800 and 1,900 in that range, then it's everybody's going to start looking at gold, and it's going to break through 2,000 very, very quickly.
Do you think that happens this year?
Yeah, I would think it's going to happen before the end of the year. Yeah.
Are there other investments that people should be looking at? I know people look at gold, and of course, gold doesn't mean necessarily physical gold. There's all sorts of gold stocks and gold companies. Right. You recommend a lot of them in the alert. Any other areas?
Right now, the stock market is okay because of what the Federal Reserve is doing. I mean, that will change at some point. But as you know, in the alert, I advise people really right at the bottom to get all in. Were my words within 48 hours of the bottom. And I haven't changed my view on that the stock market is going to continue to climb higher.
Still a good time to be in the S&P 500 then.
Yeah. With the one caveat that I could change my mind at some point if the Federal Reserve takes certain steps. I don't see them doing it in the short term, but there will come a time when the Fed starts to slow down on the money supply and would say, time to take profits. But that's not here
Tell me
right
about
now.
Energy, because you have been for years pushing not only silver and gold, but also energy stocks, oil and gas stocks, which have taken it on the chin in the last year. Right.
Okay, so that's it. So it's the SOG. So silver, oil, and gold. Those are the three that I think will benefit from price inflation. Now, I was bullish on silver, gold, and oil before this lockdown. When the lockdown occurred, that changed the short-term dynamics for oil because people aren't going to work, they are not traveling. Oil production is demand is very, very low. So basically, you have a situation where a lot of the marginal players are getting wiped out across the board. It's brutal out there. A lot of them in the United States here. The high cost producers are not going to survive. So the supply is shrinking. So, and I say this in my alert, I expect silver and gold to move first, but then I expect an advance in oil also. Oil's been sort of going up off its bottom, but I expect a spike in oil somewhere down the road, not as quickly as silver and gold. Silver and gold is going to move first. It's moving right now. Oil will occur because when things get sort of back to some kind of normal, which who knows when that's going to be, and you start to see some increase in demand for oil, you're going to have a lot less supply, and Saudi Arabia needs the oil price up, and Saudi Arabia will return to a significant degree in terms of controlling the oil price, because a lot of the Texas oil producers will just not be able to come back that quickly that have shut down. So you're going to have Saudi Arabia in the catbird seat, and they need the revenues desperately for their domestic programs. So,
all right, let's take it from what individuals can do, and again, you can learn a lot more at Economic Policy Journal. But talk to me as a fellow policy economic wonk. Let's assume your predictions happen, and we see sizable inflation. And I don't think people remember what horrors inflation wreaked on the nation and people in general,
right.
that people's lifetime savings are wiped out. It's a thief that comes in the middle of the night and takes what's in your bank account and cuts it down to size. And it's just, it is ugly to the point that Paul Volcker, in my memory at least, helped lasso inflation and bring it back down. What would the Fed have to do to bring down inflation? And then let me ask you what you think they're going to do. So if you were the chairman of the Federal Reserve and inflation gets to, and you predicted it could be as high as double digits if I recall, let's say it hits 10%. What do you, the Federal Reserve Chairman, the king of the Fed, what would you do?
Yeah, well, I would even now just stop printing money. Just stop the money supply growth completely, 100%. If there's a Federal Reserve, you replace currency that is worn. Somehow maybe try and get the dollar back on the gold standard, and that's pretty much it. And then go golfing in the afternoon.
It's not as easy as that, because you've got presidents of both parties, you've got every banker, you've got every CEO screaming that they need dollars. I remember the stagflation of the late 70s, early 80s, where we had high unemployment and high inflation. And I remember going to college and they were saying, the Phillips curve shows that is, well, not impossible, but it never ever happens. You can never have high inflation and high unemployment until we lived through it. Could we be facing a situation like that?
Yeah, I think stagflation is a very real possibility, because what you're going to have is they've pumped so much in, the inflation is going to happen. And what the Fed may do is not print as much as they would be required to keep the old structure going, because they're really always pumping money into the capital goods sector. And if they don't pump enough, it's not going to support that sector. So you're going to have a collapse of that sector and inflation at the same time. Stagflation could very easily occur.
If you could, and you wrote a book on this, if you could fix the Fed, first of all, if you could boil it down into a sentence, the problem with the Fed is what, and the solution to that problem is what?
Yeah, the problem with the Fed is they print money, and they should just stop. Just leave the money supply exactly where it is, because that always causes distortions to the economy. You stop printing, you stop the distortions, and you could have a rapidly growing economy where people could actually focus on production versus what's going to happen to prices, what's going to happen to interest rates, all kinds of things that we have to worry about these days. That
you understand that is
a problem.
That is a non-starter, in that what was it that Nixon said? We're all Keynesians now. That the idea is it's the Fed's job to get the economy rolling, and we get it rolling by giving people free money and prime the pumps, get it moving.
Right.
And so when inflation hits, it's going to have to hurt a lot for the
Right.
feds to do what you want them to do, stop printing and go play golf.
Right. Right.
Will they do it?
I don't think they're going to do it until the inflation is very serious, because they actually now have a theory that inflation should be on the high side. They have a target of 2% inflation, which doesn't make any sense for me. It sort of comes out of nowhere. Actually, it comes out of Milton Friedman's monetary theory a bit. But their argument now is that, well, we should have inflation above 2% to make up for the previous period when it's been down 2%. So they're not even going to be concerned about it until it hits a 5%. And then you would have to raise interest rates where they're close, like 25 basis points on the federal funds rate and things like that, to zero in that range. You would have to raise it, if inflation is 5%, to around 7% to kill the inflation. And they're not going to raise interest rates that quickly. So the inflation is going to continue for quite a while.
So the idea is that every time that inflation goes here, the feds keep chasing it by bringing up the interest rate,
right?
But they never quite go higher to it in order to push it down.
Exactly. That's very tough. I mean, Volcker did that, but that's very tough. I mean, he was, and they went after him. Unions went after him. Home builders, they used to send them bold rocks and bricks and lumber that they couldn't use, and to the Fed. And I mean, it was good. He was 6 feet 7 inches tall, so he was a tough guy on top of it. So,
let me end it, and I appreciate all the time. Let me end it with a question about cryptocurrencies. And
okay.
I've got a fascination with cryptocurrencies, what people call Bitcoin, for the very, I guess, Austrian reason that you cannot inflate it. That if people use Bitcoin, it grows at a very, very small rate every day, and so the Fed could never do what they do to dollars to Bitcoin. Do you ever see a point where perhaps cryptocurrencies become a safe haven if inflation starts going crazy?
Yeah, well, it could. I mean, it's kind of interesting that Bitcoin isn't moving in price now, while the stock market and gold are moving up. I'm not exactly sure what's going on there. It might be a case where there are people in I call it Mao Valley, Silicon Valley down here, who need the funds to keep their businesses going and their lifestyle going or something. So they're liquidating Bitcoins. But the problem with Bitcoin isn't as much as you can't increase the supply of it, because I think the government could regulate it out, make it very, very difficult for electric e-currencies to compete with the government if they came out. They're studying something called the Fed coin. And so consequently, I think the problem with it is that the government could regulate it out and could introduce a Fed coin if they felt that's the way things were going. But also, electronic currency can be tracked. And if you're afraid of a government, the surveillance government, and the surveillance government watching us more and more every day, a currency that can be tracked is a very, very dangerous thing. There's an old Swiss saying, gold has no smell. What that means is
I've never heard that one.
Know, there's no track record of where it came from. When you're spending it, there's just no track record with it. And so consequently, it's something we should remember at this time, because, people are always coming up to me, telling me about different ways that they can mix Bitcoins and do different things with Bitcoins. But you're really playing with fire, because you don't know who's doing the mixing. And you're not going to
say mixing. What do you mean?
What they do is they, and I'm not an expert, so I'm going to botch the real technical part of this. But what they do is if you've got Bitcoins that you got paid from somebody, so there's a track record of it going to you, and you don't want a record of where you're spending it or what you're holding, you mix it. There are mixers
right. I know what you're
bring different Bitcoins together, mix them up, and they give you exactly the same dollar amount. Maybe they charge a fee, I don't know, roughly the same dollar amount that that you put in, but you get different coins, so you can't really track where it came from. So there's that. But my argument is, well, how do you know who the mixer is? Suppose it's the government that's tagging it all. But in addition to that, when you're spending it, if the government says you can't take Bitcoins unless you know where they came from and you have to record who's spending them, there goes your whole mixing program.
Hey, it's always fascinating. I'm really glad we got this opportunity, and let me promote it for you. Economicpolicyjournal.com, and that's free. If you want to subscribe to the Daily Alert, that's something you pay for. I hope you're making good money off that. I enjoy it. I use it for what little tiny investing I have, but also what I love about the alert is the economic lessons that are inside, so I can better understand from an Austrian point of view what is going on with the Fed and what's going to happen. Any predictions about this fall? Does it matter whether Trump is reelected or Biden is elected? Will it make much difference when it comes to the mess the Fed is in?
Well, I think it's going to be a different kind. I mean, I don't really see anything good coming out of either situation. Trump is really erratic with his policy, so you don't really know where he's going to go. At the same time, the left, I think, will. If you see protests now and burning and all that kind of stuff, if Trump is reelected, it's going to be worse. On the other hand, with Biden in there, he is not telling us who his advisors are from an economic perspective, but he's got a lot of people around him, it seems, that really, really scare me. They are, there's the monetary theory people. This Stephanie Kelton just submitted a report to him. And then you've got some guys that are very aggressive tax people that are anti-wealth. They don't understand how wealth capital creates.
When you say aggressive tax people, you mean aggressive that they want to raise taxes or they want to lower
taxes?
Yeah,
much to a large degree. Yeah, very, very aggressive tax people. Do you don't really know?
Do you ever see a point where the federal debt becomes this issue? We keep kicking it down the road. We constantly kick it down the road. Right. And there used to be deficit hawks. They're all gone. They've all been shot. Right. At some point, when we have 100% of our GDP is debt, and then it grows. Once interest rates have to grow to stop inflation, if you're right about inflation, then the service on the debt becomes unattainable, and the government could default. I mean, I'm seeing two roads, each one which leads to a guillotine economically. If inflation isn't checked with higher interest rates, but higher interest rates mean the service on the debt goes so high, most of our money in the federal government goes to service this debt.
Right.
What am I missing here?
Unfortunately, you're not missing everything. It's a mess out there, and we really don't know. There's no easy way out of this, because you could, again, just stop printing the money and you'd have a rough 6 to 9 months, and then everything would clear up. Nobody's going to do that. You could default on a debt. That's extremely unlikely to happen. And the modern monetary theorists, there's a book out now, got around here somewhere, The Deficit Myth, by this Stephanie Kelton that is advising Biden. And she says the debt doesn't matter. She's promoting more debt.
But so is Trump.
Yeah. But as much as Trump is promoting, actually doing it, increasing the debt, Kelton would wants more. She wants a universal basic income. She wants all kinds of spending all over the place, and basically, it's madness. It really is. And what it does, they're also making the economy more centrally planned, more socialistic. So you have cultural Marxists coming from one angle, you have central planning economists coming from the other angle, and free market people are few and far between right now.
Do you see a possible Great Depression?
Yeah, I see something worse. For example, let me
get my brain around that. You see something worse than the Great Depression?
Oh yeah, the Great Depression. There's a lot of people unemployed, but you can still work around it. Okay, if you're an aggressive entrepreneur or whatever the case might be. What could happen? Take price inflation for a while, for example. Nixon put his price controls on that you mentioned when inflation was between 4 and 5%. That could we could very easily hit that. We could probably hit 10%. Price controls creates shortages where people just can't get supplies they need. You're going to be standing in lines. I remember when Nixon put the price controls on and Jimmy Carter did also the price line, the gas
Yep.
lines. You had to wait in line for hours to get gasoline. You could get that across the board on the economy, and then you're just wasting time because you have to unless you're wealthy. I was told about a guy who he figured out how to solve the gas problem shortage for himself because they were also alternating. If you had an odd number license plate, your license plate ended in an odd number, you could go on these days. If it was even these days, I mean, there are all kinds of crazy rules and there's still the lines. But if you're wealthy enough, you can solve all that. What he did is he went and bought his own gas station. So
Incredible.
he pulled in.
When all right, let me ask you the unfair question. I promise this will be last. So you see something potentially worse than the Great Depression. When? The worst question ever.
2021. I mean, it's coming. It's not going to be pretty. You know, the price.
01, a year or two from now.
Yeah.
Soon.
Because if they put price controls on, it's going to wreck the economy. You know, one thing when they put rent controls on in New York City, Bronx looked like it was bombed out. Even Gunnar Myrdal, who's a communist economist who won the Nobel Prize with Hayek in the 70s, he basically said that the way to bomb out a city, if you're not going to use bombs, is to put rent controls on. Because I'll tell you, the first time I went to New York City, I drove through the Bronx, and it looked like a bomb hit the place. It was incredible, and it was all because of the rent controls. They really didn't make any sense, and so owners abandoned.
And you see this that this could happen within the next 2 years.
The threat is there. So somebody asked me about it recently, and they asked me what do I put the odds at it? I would say 60%. Okay, I'm not saying it's going to happen, but I'm not saying it can't happen. It's there. The threat is very, very real. You have both Democrats and Republicans are all thinking like central planners. They don't understand. They do not appreciate free markets. They think they can control this stuff. I mean, look at the lockdowns they're putting on. It's madness. It can't. This is not a good way. The thinking is not there to solve this.
Robert Wenzel, this is by far the most uplifting and optimistic conversation I've had all day. Hey, again, thank you so much for your time, and I'll keep reading you at EPJ.
Great. Good talking to you. Appreciate it.
If you enjoyed that conversation, by all means, click one of these other great programs. We have the best conversations with the most fascinating Coloradans. And subscribe to our channel. Just click down below and hit that little bell button too. You don't want to miss a single show.